So Jay, there are three fundamentals that you're looking at around Nvidia. What are they?
Well, first was the earnings overall, but we look under the hood. We look at that revenue beat, which was good. They consistently beat on revenue, and we look at the chip, the Blackwell chip. People were concerned: is the demand still there? Jensen addressed that. The demand is still there. There were no snafus as far as deliveries go, so we checked that box. Revenue beat, Blackwell, things looking good. So that was optimistic. The DeepSeek question. DeepSeek is the one question on everybody's mind. This is what drove the stock price down late January, early February to that 113 low. Is this competition good? Is it going to hurt their growth going forward? Jensen welcomed it. Did that resonate with investors? It doesn't look like it's eased anyone's concerns that this competition will be good. How is that China trade going to be going forward? But Jensen didn't say this was going to hurt them. He welcomes the competition, and he doesn't see it being a headwind. And then lastly was, that CapEx spending from its biggest, users of the platform, the Amazons, the Googles, the Metas. There hasn't been a slowdown. We saw that with their numbers. The projections, though, the guidance going forward, that has been the bugaboo for not just tech stocks, but all stocks. You look at Walmart. They had a blowout quarter. They guided a little lower. Nvidia, we're used to blowout quarters. We got it. This was fantastic. Was it as big? It was the worst revenue beat in 2 years, but they beat. And the guidance was solid. But what is hanging over this stock right now? It's tariffs. So when you look at Nvidia, the stock, phenomenal. It's a juggernaut. It's best in class. Its growth projections continue to be strong. What it made in the last year is almost what it made in the last 10, or its first 10. So we're seeing the growth, but it's not impressing the street, and we're concerned right now, and you see it in price action. As a technician as well, I think Jared did a great job of pointing it out. We are not rallying right now. We're kind of stuck in this level, right. And that call didn't give us that catalyst. So what is the next catalyst? In March, when he presents at his annual conference. So we'll see what he says then. But right now, investors are kind of like, all right, this didn't wow us,
sure,
but we're not panicking, we're not getting out, so we're kind of just stabilizing here, waiting on tariff news.
The commentary from UBS out this morning also kind of mirroring what you were mentioning here in the big four U.S. tech firms. They're all forecasted to grow by 35% in terms of some of the CapEx spending that's coming forward there. But that points to something else, which is the solid AI adoption trends. They believe it's going to continue to boost monetization here. How does that play into the fundamentals, and how much of that goes strictly to Nvidia versus the rest of the competitive landscape?
Exactly, and it's a competitive landscape. I think that is the key word. We're starting to see more competition, and then there's concern that this CapEx spending isn't getting the results that people want. They may have to draw down. What does that do to Nvidia's bottom line when their biggest customers are starting to wean back? So that is the cloud that's overhanging it. But when you look at the quarter, when you look at the results, they knocked it out of the park.
Yeah.
But it wasn't this blowout that was going to take us to the next level, because there's still too many concerns, geopolitical concerns, that are weighing over this stock. So when you go back, you look at the technicals, and that story shows that we're kind of in this no man's land. And if we do break down, as Jared pointed out, then you want to watch that 113 level, the lows we got after the DeepSeek news broke and took us down there.
Following its fourth quarter reports, Nvidia's stock is up 1.6% after West End Capital Management and Bank of America both voiced optimism about the firm and its stock. Ali Mogharabi, a senior equity analyst at West End Capital Management, stated late yesterday that the company's new Blackwell chips appear to be in high demand, based on both its Q4 results and its guidance. According to Mogharabi, as inference advances and the uses of all this AI technology expand, there may actually be a rise in the demand for more specialized CPUs. Bank of America raised its price target for Nvidia stock from $190 to $200, calling it a top candidate for AI domination. The bank thinks that robust, long-term demand dynamics can help the chipmaker's data center division, which saw record-breaking revenue in Q4. At a forward price-to-earnings ratio of 28 times, the shares are being exchanged. Nvidia has fallen 9% so far in 2025, although it has increased 2% in the past month and decreased 12% in the last 3 months. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
So we are seeing some gains here ahead of the open. Of course, this comes following the initial drop that we saw on the results yesterday. I'm curious how you're making sense kind of that knee-jerk reaction maybe that we did see and your assessment of the quarter.
Thanks, Shanna. Thanks, Brad, for having me. Great to be back on the show. I would say, our key takeaway here is that Blackwell is ramping very fast. 11 billion sales in the quarter. That's well above our expectations. That's well above what the company guided for last quarter of like several billions. And I think that's what the street likes in the print. It means that Hopper revenues are declining overall sequentially. But the most important takeaway here is that it dismisses concerns of a slow, of a backloaded year. There were a lot of concerns in recent months, in recent quarters, around Blackwell being slow to ramp, around some challenges in ramping the rack level system that's really pushing the boundary of innovation. We're talking about really complex systems here, and I think investors were worried about that. And now you see the company printing 11 billion sales of Blackwell in the quarter. That completely dismisses, those concerns, because now we expect in the next quarter probably sales of Blackwell approaching 20 billion revenues, and that's going to more than offset, of course, Hopper coming down. So I would say that's the key takeaway from the quarter here.
And it seems like they're really leaning on these different configurations of Blackwell to drive some of the margins going forward. If we can get real nerdy with it for a second here, what does that configuration set and the broader kind of ecosystem for Blackwell look like here, especially as they're trying to make sure that they can extract more margins to impress investors long term who may not have been impressed on the initial release of the results?
So, as you know, up to now, a GPU system, consisted in 8 GPUs, a GPU server, what NVIDIA has been calling, like a DGX, an HGX, comprised up to 8 GPUs. And as we're moving to Blackwell, we still have the option to have an 8 GPU server, but now you also have a 36 GPU server. You also have a 72 GPU server. And you can, use different types of networking to connect these 72 GPUs or these 36 GPUs, and you can water cool them, you can air cool them. And so that makes, of course, the ramp of that new generation much harder. And so it's no surprise, that gross margins are coming under pressure, and we expect things to improve throughout the year as the product ramps. But actually, over the longer run, these chips are not getting any less complex. As you think, about Rubin and its successor, we expect a lot more high bandwidth memory, which is this memory where the chip can really exchange data with the memory at very, very fast bandwidth, very, very low latency. We expect more of that in the subsequent generations, and that's going to keep driving gross margins down in our view. That being said, revenues are going to grow so much, and NVIDIA is going to be able to extract leverage on OPEX in a way that's still going to drive very, very strong earnings growth. So we're not concerned about any of that.
NVIDIA assured investors that its future appears to be as bright as ever yesterday when it released its Q4 2025 earnings. Weeks after its Magnificent Seven colleagues, the leader in artificial intelligence, AI, released its quarterly earnings. Investors have been eagerly awaiting the company's forecasts for the near future and the extent to which specific market trends have affected it over the past month. NVIDIA outperformed Wall Street projections for revenue and earnings per share, despite continuous trade volatility, indicating that its growth has been largely steady. NVIDIA CEO Jensen Huang is unconcerned despite data showing that the company's growth has slowed, including projections for year-over-year growth potential. Huang made it apparent during the call that he thinks NVIDIA can maintain its dominance in the rapidly expanding AI sector by addressing a topic that many experts have conjectured could pose a danger to the company. The main reason many people listened into the most recent NVIDIA earnings call was probably to find out more about the business that caused NVIDIA to plummet last month. The AI sector went into a frenzy last month when DeepSeek, a little-known Chinese startup, unveiled its newest large language model, LLM. Investors began to doubt nearly everything they believed they knew about the future of artificial intelligence when they saw that the DeepSeek R1 had only cost $5.6 million to train and had been trained on outdated AI chips. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
About just the earnings growth that you are expecting in the quarters to come. And I want to play a quick soundbite that we heard from CEO Jensen Huang, NVIDIA CEO Jensen Huang last night, talking about Blackwell Ultra and the impact that he sees that having here in the second half.
Blackwell Ultra is second half. As you know, the first Blackwell was, we had a hiccup that probably cost us a couple of months. We're fully recovered, of course. The team did an amazing job recovering, and all of our supply chain partners and just so many people helped us recover at the speed of light. And so now we've successfully ramped production of Blackwell. But that doesn't stop the next train. The next train is on an annual rhythm, and Blackwell Ultra with new networking, new memories, and of course new processors, and all of that is coming online.
And when I bring up that soundbite there in the context of what you were saying earlier, just in terms of the fact that you thought Jensen Huang was able to alleviate some of those concerns surrounding the delays and maybe the impact that is ultimately going or initially had on NVIDIA. How do you see, how strong is NVIDIA's pricing power still here in the quarters to come?
So I think the pricing power is going to remain very strong for the foreseeable future. You don't really have much competition out there that can match NVIDIA. You have AMD that's like more than an order of magnitude smaller today, and who's struggling to ramp more than like its two very large customers, Microsoft and Meta. And then you have ASICs, you have in-house ASICs, and so far you only have one hyperscaler who's successfully ramped, like the TPU, and I'm talking about Google, of course. They've been working on that project for 10 years, and it's no easy task. You have to, it's not only like designing the chip, it's also designing all the software on top of that to make a good use of that chip. It's also making a chip that's flexible enough so that it can adapt to all this change, in the workload. That's like all these AI models introduce new technologies from one generation to the next. Now we're talking, about 3 scaling laws. You have like a reinforcement learning that comes into play. All this variation is easily handled by GPUs. It's much harder, when you have like a chip that's more dedicated. And so bottom line is that there isn't that much competition today. And so we expect NVIDIA's pricing power to remain very strong. And if the gross margins come down, it's simply reflecting, first in the near term, of course, the Blackwell ramp, and over the longer run, as I mentioned, like increasing content of memory inside these chips, but nothing to worry about.
Antoine, we only got about 15 seconds. Even with the move here that we're seeing pre-market, NVIDIA will still be down year-to-date scale here. For investors trying to figure out before the opening bell and going into the start of today's trading activity, if it's an investable company at this level on that pullback, what would you tell them?
I would just tell them that we're moving, so 2025, I think is fairly well framed, We have sequential growth that's going to be like in the mid-teens. We expect 200 billion data center revenues for the year. That's consistent with the supply chain on one side. That's consistent with hyperscale capex on the other side. All the hyperscalers have raised capex significantly, and now we have like a consistent view of 25. I think the debate is shifting to 2026. And in 2026, you're going to have a handful of players who are going to move from clusters of hundreds of thousands of chips to maybe 500,000, on a trajectory to 1 million by 2027.
Right.
That's enough to drive all the growth that is going to, be enough for NVIDIA to approach, $6 of EPS, and on today's stock price, I think is pretty cheap.
As DeepSeek's new offering caused a sell-off, which affected chip stocks like Advanced Micro Devices, Broadcom, and Micron Technology, NVIDIA's stock fell precipitously. Weeks later, the trend has slowed, despite experts' worries that it might undermine NVIDIA's hegemony. Huang discussed DeepSeek and gave background on his outlook for the company's future during the most recent NVIDIA earnings call with CFO Colette Kress. In other words, NVIDIA's executives don't fear that the startup will threaten them. Instead, because these reasoning models need more computing power, they can be advantageous to the business. Test time scaling and new reasoning models like as OpenAI's O3, DeepSeek R1, and Grok 3 Kress states are driving our increasing demand for inference. Compared to one-shot inferences, long-thinking reasoning AI can need 100 times more computation per task. Huang mentioned Nvidia's recent Blackwell success later in the call, saying, "The demand for Blackwell is extraordinary. AI is developing toward thinking in addition to perception and generative AI." Later, Huang pointed out that these reasoning models can use inference timescaling, which is a stage where the model attempts to think longer and investigate more possibilities. This is the next frontier of AI performance, according to experts, and it has the potential to close the gap between raw computational power and intelligent problem solving. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.